So good morning, active traders, and welcome to our Trading Week Ahead broadcast, coming here at you live on Saturday, January 15th, 2022. Now it's very much a trader's market because we've had sector rotation out of high-tech, high multiple tech stocks and into defensive and cyclicals, and we've had bond yield spike, and so money rotation has been all over the map. And what that means to you as a trader is you've got to be very focused on which kind of charts you want to spend your energy trading. I think right now is at best maybe light share size for swing trades. I think it's a very very risky time to be swing trading the markets because it's been in a downtrend the last 2 weeks and it looks like it's ready to fall off a cliff. The main thing that me and other professionals are looking at is the window here between the 100 and the 200 SMA and the S&P, right? Are we going to get under that 45.70 and go down to the 44.30 or so? Or are we going to just hack around in here between 4,600 and 4,800? Obvious resistance would be up at the 48.10 or so. Obvious support. The critical place to keep your eye on this upcoming week or two is the blue line, the 100 simple moving average line, which is right around 45.70 in the S&P. That's been decision support for the last month and a half. Obviously, all right? So what that tells you is to deploy that into trading decisions, what that's telling me is thou shalt not swing trade. I day trade daily, as much as anywhere from 80 to 105 trades daily, but this is a day trader's market and maybe small size swing trading. This is not a place to be throwing in new money into the market for swing trades because it's widely expected we'll see some kind of a pullback. It's widely expected that there may be a correction. It's widely expected that they may sell the stock market any time now, as they have been the last 2 weeks. The other thing to keep an eye on, as always, is our VIX, our CBOE volatility index. We'll look at both day and swing trading charts coming up. But first, a message from our sponsor, which is me. You may want to get intelligent professional insights in my live trading room. At trademastery.com, just click on where it says Live Room. I've been running Trading the Open for over 20 years now with thousands of traders from around the world that I've trained. And it's been a real honor and a real pleasure to work with a lot of people. We do both day and swing trades. We've been doing primarily day trading during this choppy market, but when the market trends, we do more in swing trades as well. We cover things mostly in the $10 to $30 a share range, 10 maybe up to 40. I don't cover things like Apple or Amazon or Netflix. And I really don't like the under $2 or $3 pop and drop stocks. So we do cover those. We like the main focus is stocks, some of these that we're looking at, like NEO, NIO, Ford Motor Company, Occidental Petroleum, Bed Bath & Beyond, Marathon. I'm just reading off my main list here. PL, Peloton, many others we like to focus on, and energy plays. So do consider joining the live room if you're not yet a member. Anyway, back to our program here. What we want to do is collectively keep a careful eye on the volatility index. And the reason is because it gives us a kind of early warning sign as to when the market's going to sell off. When the VIX goes up, that corresponds with the market going down. And so right now we see a bearish shooting star type pattern on Friday and one a few days ago, but a big green candle on Thursday. It's still nestled in this 16 to 21 region. Whenever volatility spikes, that always accompanies a market sell-off. So what we want to look at is, I'm using 18 to 20 as kind of the central measure of central tendency. I used to be a statistician for the Ford Motor Company, so I'm a numbers expert. The point is, when the VIX is clustered in that 18 to 20 region, that's kind of like gravity, and there's not much signal. That's noise. One thing, if you're familiar with audio or engineering, you look at the difference between signal and noise. This market's been generating a lot of noise. Am I right? A lot of chop, a lot of tough trading days. So we have to be patient and careful. One of the things you want to look at is, does the VIX get out of the noise zone? And that's right between those moving averages. You can see how tightly clustered the 50, the 100, and the 200 SMA are right over here, right? So when you have a tight range like this, that tells me a couple of things. One is kind of like with Darvas boxes. That's a bunch of noise. That's a bunch of hooey. We don't want to trade when the VIX is in that 18 to 20 region. That's the red zone. That's the stay clear. Or at least if you're an experienced trader, like what I do, I still trade, but I trade lighter share size. We want to trade, press the pedal to the metal when the road's clear and open. But when we're in rush hour traffic like we are now in the stock market, we want to play a little more cautiously and play smaller size and more conservatively in our approach. So the main takeaway is keep an eye on the VIX. Does it get and hold over 21, or does it get under, say, the 17 there? 17 to 21 is right outside that 18 to 20 box. So next week, if next week the VIX gets above 21 and climbs up, we want to be out of equities and in the inverse instruments, and or buying puts in the S&P, whether using 0 DTE expirations on Monday, Wednesday, Friday, to buy intraday puts for the S&P, or if you're looking at playing like I do the inverse ETFs like SPX, US Dow, VIXI, TZA, UVXY, and whatnot. So inverse ETFs / buying index puts if the VIX gets over and holds over 21. That's very valuable intel. Keep that in the back of your mind. The other technique is we want to go long in exceptional strong breakout charts if the VIX gets and stays under 17, which would be bullish for the stock market. And I hope I serve you well with that data. A week from now, you've seen how well I've been doing these events here for almost 12 years now, every Saturday, or most every Saturday. So, and if you've been with me for any length of time, you have seen how well they work. I'm a big fan, like I said, signal to noise. We're in noise right now. We want to wait for signal. Or if you do insist on trading, trade lighter share size more carefully. Lighter size carefully. It's kind of like we're driving through a residential neighborhood and we're only going, hopefully, 15 or 20 miles an hour. We're not on the freeway. You shouldn't be out there throwing Hail Mary passes and doing aggressive trading in a relatively choppy market. Okay, so enough with that. Let's get on with some charts. I'm going to switch gears here and take a look at a couple of day trading charts. One of my very smart traders, Mick, had mentioned SBEV yesterday. One of the big percentage gainers, it only doubled in value, going from $2 to $4 a share. Was anyone trading SBEV? Really nice chart, right? Really good breakout. I called it long earlier in the day, plus at the end of the day. My live trading room, I'm there 8:30 till 11, and also 3:30 to 4. So I've expanded the hours, Monday through Friday. We're there 5 days a week. Reminder though, capital markets are closed on Monday in observance of Martin Luther King's birthday. So no markets on Monday. So sleep in or do research on your charts later in the day. So we pick up on Tuesday. Anyway, but normally I'm there Monday through Friday, 8:30 till 11, and also 3:30 to 4. So we can cover the things like this. I nailed this yesterday. For those of you who are in my live room members, you saw I called along over 3.6, and I think it was 3.6 or 3.7, somewhere from there. Ran all the way to 4.30 before a pullback. Anyway, one could potentially do well trading this kind of a chart. I normally don't like cheap charts like this, but this one we made the exception for because it had volume and it had volatility. He'd also mentioned LVS, Las Vegas Sands. BBIG was okay, a little choppy. GFAI was also up there. Nice runner. So for cheapies, those are a few ones that look good. For swing trades, let's switch gears to our swing trading charts now. My favorite stock of the year continues to be the Ford Motor Company. And not just because I worked for them back in 92, 93, 94, back in the 20 years ago. But we've got a really good breakout continuation. Despite a relatively choppy market, Ford has still been trending up, taking out new highs on Thursday. And you can see we're just knocking on 26's door. I've been telling you folks here about this since 21, I think is the call. Right over the 20. So did a really good breakout to the upside there. The old Ford Motor Company. Really excited to see the F-150 Lightning and all the new lineup of EVs coming out later this year. Also strong from a infrastructure standpoint, we've got commodities like copper and with Freeport, and U.S. Steel starting to bounce. Really good chart someone mentioned last week was LAND. Had a bearish engulfing up there at the top near 35, but it still has an outstanding overall trend. It's been broken here the last 4 days, but it's starting to come back to life. So if it climbs up out of the muck and pokes its head up over 35.5, maybe worth a shot. Trader asked about BBL. That's a good breakout. Nice continuous. What I like best about this chart, what's appealing to me about this particular chart pattern, what makes this chart sensible for trading is the 45-degree angle breakout that continues up to new highs. That's good. In a choppy market, you're looking for relative strength. If the market's doing this, and what you're looking at, well, you can't move my hands backwards. But the point is, if the market's doing this and your chart's doing this, beating the market, that's a good candidate for a potential play. So BBL, Bravo, Bravo, Lima looks really good up here over the 67. Rio's also another good chart. Rio Tinto up here near 76, 77. Oil's been on the run. Our UCO is up, as is Oxy Pete, up near 36. One thing that I wanted to mention to you that I think can really help you potentially make bigger winning trades, better winning trades more often, is the chart pattern where you've got large green candles in recent days, in the last week or two. And you can see this chart, it just pops out, right? We can see relatively large green candles. And, you know, one thing we like is lots of buying. So when you're evaluating a chart, or at least when I'm looking at a chart to trade, and I'm asking myself, how many shares should I trade? Is it worth trading in the first place? Where should my stop loss be? Things like the height of the green candles comes into play, because that tells you you've got enthusiastic buyers, at least on that particular day. So that's something to pay attention to as well, is the height of the candles. Right, good point. Yeah, Wendy's saying with the large green candles, it pulls back and goes higher. Yeah, that's often the case. She mentioned, what she said too is another good point. Just a reminder: don't trade the day after, because like she said, usually you'll pull back. And I always say large days usually followed by small days, and that's true on red days too. Large candle, small candle. It's like it inhales, whoosh, whoosh, then exhales. Big candle, big candle day followed by itty bitty day, then another medium, then a big candle day. So don't trade the day after a gap or the day after a large candle day. Both of them are signal, right? Those are signals, but you trade 2 or 3 days after. So that's important. Question from John. Hey, John, when to exit a winning swing trade? At 2-day lows. If something takes out a low beneath the previous day's low, I will start to scale out or go to cash entirely. So I trail stops at roughly 30 cents or so beneath the prior day's low. So for example, with Oxy Pete, let's say we're swing trading Oxy. Yeah, that's a good example. Who can tell me, audience participation time here, where at what point, let's say you're swing trading Oxy, been in it from 25 and you're counting the money, and that's great, but where do you start to scale out? Or where do you go to cash entirely in this chart? Don't say, I don't know. Using a loss of 2-day support would be where? Where would you put a sell stop order on your open position in OXY? Remember, it's under the 2-day low. So the answer would be somewhere near 33.7, 33.6. Okay, and if we look at that in context of the large chart, so 2 days. Don't just use a single day for decision making. Use the 2-day pattern. That's what I've taught and trained and traded myself for over 2 decades, because it's very smart. One thing that you look at, for example, in a daily chart, and see a loss of a 2-day low is right there. So if you'd been in this guy from 27, 28, you would sell right under, say, 34 at the lowest. That's a loss of the most recent 2 days in candles. That's a very smart strategy, because it gives you unequivocal decision support. You don't have to draw squiggly lines. What's the MACD and the Fibonacci line. No, just do what a professional trader does. Use the previous day's OHLC, open, high, low, close. If it's Boolean operator, if price is less than previous day's low, the PDL, go to cash. And similarly, when price is above the previous day's high, that's when you want to start to scale in or initiate a new swing trade. So yeah, good smart questions. I appreciate it. Let's see what else we have here. We're almost out of time. We have just a little bit of time left here. Well, maybe 15 minutes. We're halfway done. Yeah, Halliburton's great. A rock star chart. Our oil and oil service instruments continue to skyrocket up. You can see Hal is at 29. Quick reminder though, as I've published in my award-winning Stocks and Commodities magazine articles, which I'm overdue again for submitting my article. I'll get it in this weekend if you're out there listening, Karen. We don't buy nines when we get over the 30. So never buy a 9. Sell a 9 or tighten in a trailing stop if something has the number 9 in it. And the reason is simple. That's a good exit target that I've taught thousands, if not tens of thousands of traders. Sell the 9. Buy over the next whole number. And the same thing for day trading. Let's say you buy something like 2110. You should sell the 2190 or at least tighten up a trailing stop the closer it gets to that. Because frequently it'll go up to the whole number a little bit higher and then crap out and go down. Or it'll stall and not go anywhere. So at a minimum, take profit and do not enter at a 9. So I would not buy I would not buy it here. But if it gets over 30, again, not a trade recommendation, but if it gets over, say, 30.2, 30.3, somewhere north of 30, that would be a trade. And I'll maybe remind me next week to look at this chart again, and we'll see where it went. I would fully expect this to go from 29 to maybe 29.7 and then back down. Or 29 to 30.1 and then crap out and go down. So you don't want to enter there. And those are the kinds of things that I teach exclusively in my live trading room, available at trademastery.com. These weekends have been popular. I've had over 6,000 people register for my Saturday week aheads over the last decade plus. If you want much more coverage in real time, with real-time answers and real-time entries and exits called for you, be sure to join my live room for both swing and day trades at trademastery.com. We don't have $2,000 overpriced courses. We don't front-run people with low-float, crappy, $2 junky pop-and-drop stocks. None of the shenanigans, but just professional trading focus. If you look on the front of my Trade Mastery site and scroll down, you'll see a screen cap from my Fidelity account that shows that I did over $23 million worth of order flow in 2021. And I'll post my 1099B as soon as I get it. It should be out in a week or two, right, from Fidelity, sometime late January, early February, so I will happily post that too. Be sure to learn from people that have tax return proof that they trade, right? Don't learn from all these morons that just talk the talk. It's like that movie, I think it was from Full Metal Jacket. Anyone watch Full Metal Jacket? What is your major malfunction? Anyway, do you walk the walk? Do you talk the talk? My competitors talk the talk, whack, 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 but no tax return proof. They come up empty because they're BSers. They're not honest people. Only learn from those of us that have tax return proof that we actually really trade. Not just broker screen caps. Anyone can Photoshop those, but real tax return, like my 1099 that I showed. That's really important, I think, to learn from people that actually practice what they preach and don't just talk the talk. Very much of the day trading industry copied me from 1999, even down to copying my university site theme. I'm the most widely ripped off guy in the industry, for good reason. I know my stuff. Everyone else is like internet marketers and they're derivatives. So make sure you learn from people like me in the live room. I'm sure you'll find a lot out of it, and you can do the trial for what's just $47 for a couple weeks. So for less than the price of a coffee a day, you can get on board. All right, let's look at some other swing charts here. Trader had asked about PBR. Papa Bravo Romeo looks fantastic. This illustrates another one of my favorite chart patterns, and that is the small followed by large whole real body candle pattern. And for example, in this one, you can see does everyone see that? Small followed by large. Again, I'm all about wide ranges. Range expansion. Now, you shouldn't need to use an ATR indicator, right? I mean, you should be able to eyeball charts and see if the average true range is going up. But we would expect, if we put an ATR indicator on this chart, that the line would be going up. The more experience you get as a trader, the more you realize you don't need squiggly lines. You need price action, you need risk management, you need pattern recognition skills and timing skills. Anyway, small followed by large oil body, that's good. And the volume is pretty healthy over there compared to the last few weeks. So that's good for go over the, not a trade recommendation, but I would buy any new high, say 1270. And then again over the 13, say 1310, 1320. But this PBR, that's a good chart. I like that. Has my stamp of approval. Boom. Bum 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 bum. Ba dum ba ba da ba dum. Dum 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 dum. It can fly. Veil. It's okay. Not a great chart. The range is okay. It's a slow trend. This is kind of what I call a bunny slope chart. This would be like for newer traders. Traders without much experience. The volume is fine. It's over a few million a day. The range is not extreme. It's a slow, steady grind, which is fine. Probably not going to make a fortune trading it because the range is only a few dollars. But it's got a nice, tight, clean, gradual trend. So this is a bunny slope chart. This is the kind of chart for newer traders. It's okay. It is tradable. It does pass muster. It is tradable. Just not excitingly tradable, but it's tradable. Now that's a great chart. Same pattern, right? Small followed by large whole body, UAN. And again, I have no idea what most of these companies or charts are, and I don't care. I just want to make money, so I don't... What does the name UAN stand for? It's the blah, blah, blah company. And why is it going up? Well, if you do research, you can see the third quarter earnings forecast of blah, blah. We don't care about that crap. All we care about is making money. Is it tradable? Number one. Sure, it's a great chart. 78 to 100. Good chart. Has my stamp of approval. I'd hit it. Again, always expect a false breakout right at the high. Never ever buy right at a breakout right above resistance. That's a surefire way to lose your money trading. You almost always get a false breakout. So what you do, and what I teach in the live room at trademastery.com, is how to set false breakout filters. And the higher the price, the instrument, the wider that would be. So for example, this, I'd buy north of, say, the 103, 104. I would not buy right over 102 because it just had a big day and it may swoop up a little bit and then pull back or do a reversal. So I'm going to be a little cautious, but it's a great chart. It's got a nice, perfect move up and the all green, nothing but green on the chart. So green on the screen. So that's tradable and a good chart. That's also a great chart. Same pattern, ECPG. Now that one's sketchy. I don't like that one. And Alcoa is okay. It's got the range. That's the first thing you look at, by the way. As a professional trader, you always evaluate the range. Magic chart patterns, who cares? What counts is range risk management, right? For example, I will tell you, and this is the very honest truth about trading. The most important part of the chart is not the main part of the chart. Ask any floor trader. They'll say, well, yeah, of course, about what I'm going to say to you right now. The most important part of the chart is that. That's the single most important part of the chart as step number one to qualify whether or not an instrument is worth trading. To figure out whether or not it's valuable enough. If the risk-reward numbers, if the profit that you could make outweighs the risk of being wrong in that chart. Now this one is absolutely good because it's got a $20 range. If you look at the low here is 44 and the high is up at 64. It's got a $20 range. $20 range on a $50, $60 stock, that's good. I like at least a 10% range. And this has well over that on the recent price action. So that's the most important part of the chart. Where traders get into trouble, myself included back in the early days, was I would be enamored with a chart pattern, maybe a bullish cup breakout, or an ascending triangle, or a flag, or a pennant, and not pay much attention to the right side of the chart. The right side of the chart is infinitely more important than the left side. Also, exits are a lot more important than entries. Counterintuitive, right? And newer traders would think, well, it's all about your entries. And, well, the range is interesting, but I really care about the chart pattern. Is it in a straight uptrend? Well, yeah, but if the range is like from 20 to 21 on a 3-month chart, you're not going to make any money trading that chart most likely, right? Or nothing significant. The range is more important than the pattern, and your exits, where you scale out of or scale into a trade, is a lot more important than the entry. Okay. Both very counterintuitive, but very true statements. And again, my live room at TradeMastery.com. You can go to the front page at Trade Mastery and scroll down, and you'll see the $23 million screen cap for my Fidelity account, and one from a long time ago, the 1099 with 4.9 million or whatever. So I do a lot of trading, and I've got a lot of real money experience, and I trade daily, and I always like to tell my traders where I'm entering, where I'm exiting, and why. And again, we focus mainly on day trades, but for here, I thought we'd cover some swings as well. Let's see, PayPal. Hey, thanks, folks. Sure thing. Let's take a look at. From Michael, no. The only place I scan is I look at the Fidelity in the Active Trader Pro workstation. They've got the standard thing that comes with any broker. You see the most actives and the percent gainers, and so I look at the most actives list and the percent gainers. You do not need any special scanning. All you need is a brain and good decision. Now that looks like it would be a short under the 170, right? Nobody in the right mind would buy this, but it'd be a wonderful short under 170. So my official call would be short 168, cover stop 170, exit target 161. Write that down and remember that. I'd short the one, not a trade recommendation, but if it gets under 168, I would immediately short it, and I would tighten up a cover stop with an exit target in the back of my mind right over the 160. Again, that multiple of 10, so right over the 160. So I'd short the 170 and cover the short / buy a bounce near the 160. So PayPal's taking it in the shorts. Dun 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 dun. I like PayPal as a customer. Let's see. From selling on the VIX, do I use chart patterns? No, actually on the VIX, chart pattern, the classic chart patterns are completely worthless because the VIX, it's a unique instrument. What matters is breakouts out of the consolidation range. That's the number one thing. Ask any floor trader. The VIX breaks out of, like Darvas boxes. If we break for example, if we get down under 17 or over 21, that's a signal. Inside that 17 to 21 chop range we're in right now is a don't trade me signal. Yeah, sure thing. I see someone's asking about CRSR. We got just a couple of minutes left here, gang. Thank you so much for being here. I do appreciate your time and energy. Another pretty terrible chart would be a short down. Again, not a trade recommendation, but I'd short under 1950. Okay, with the cover stop at 21. Okay, and then Docu going down. Yeah, that'd be a wonderful short at 118, right? You get a professional trader, you only need a second to look at the chart. I'd hit the 118 on a short with the cover stop at 120. Exit target would be the 110. I'd play the dime, maybe even down to the 105. But yeah, short the 120 makes sense, right? See, when charts go down, you want to sell them. When charts go up, you want to buy until it proves you wrong. This is a good example of the 2-day pattern rule. If you'd been long this thing on the way up, a loss of 2-day low would have occurred right here, right? That would have been your sell signal. Yeah, not only did we get a bearish engulfing, which immediately generated the sell signal right there, 33.30 or so, but on the day after, it continued to go down, and that'd be a good place to have exited the trade. So use those 2-day high-low patterns and keep your powder dry. Let's stay frosty, trade smart, and I will see you guys in our next event. I hope this has been helpful. Oh, big turnout. Glad to see so many of you here. Any questions before I wrap? Let me say, any questions about my live room service, okay? Now, unlike our current administration, I'm not a socialist left-wing moron that wants to give away lots of money and lots of free stuff for everyone. I mean, I'm kind of like Costco. I give away good professional, world-class, hopefully you guys agree, knock on wood, world-class top-level training in service of hopefully incentivizing you to become part of our community at Trade Mastery. We don't rip people off with overpriced $2,000 and $3,000 courses. We don't front run our members. We don't do any of the BS and shenanigans. There's no upsells, no foolishness, just good, honest, old-fashioned trading. You may have seen me featured everywhere from the street to Money Show to I'm even on Fidelity's website. If you Google Fidelity Ken Calhoun, you'll see one of my ADX articles. So let's see. Yes, Arnold, that's a positive. Yes, absolutely. Hey, Serneth, how you doing? Well, you're certainly welcome. Good question. Hey, thanks, Oz. Would I write the entry or only talk? Sorry, I'm not too good in English. Yeah, I'm glad you asked. One of the features of the live room that sets me apart from everyone in the world is I do look in the upper right corner. Humor me. Look in the upper right corner. Answer key. Before the market opens and continuously throughout the session during the morning, I post specific entries, and live I call the exits as well. So that way traders know exactly what to look for in entry, what instruments are worth trading, and specific price triggers to use for paper trading for entering their position. So I give you the answer key, like I call it, unlike anyone else. No one else that runs a live room is good enough to do that. They just say, well, it's going up. Let's see, walk. Maybe it's worth trading. Did anyone trade it? That's BS. Professionals need specifics, right? So that's why I give you guys, and that's why I got so many institutional clients as well as home retail traders and everyone in between from around the world. We've got a really big community, and it's very vibrant. I answer questions honestly, accurately, thoughtfully. I don't bite anyone's head off. I don't ignore people. I answer the questions, and I do the best I can to help. So I've done millions and millions and millions of dollars worth of trades year after year, and so I've got a lot of experience to draw, and I hope that I can help you make bigger winning trades more often. Good point. Hey, you're welcome. Let's see. I think that's about it. Okay, question. Let's see. How soon does the room open? I get there at around 8:30. If we have a CPI or PPI, some economic report coming out, I usually show up around 8:20, so East Coast time, so I'm always there at least an hour before the bell. Unlike lazy other people who run rooms, I don't wait until 9 o'clock to show up. You need more time. The reason is you want to have some history of the trend of the pre-market charts understood and followed, that you follow it for at least half an hour before the bell. So that's why I'm there at 8:30, bright and early. And also to answer questions from traders. We get so many great questions from intelligent folks. It's good to answer. Let's see, question. Let's see, do I cover Amazon or do I cover options in Amazon? No, we don't cover options, and I don't cover high flyers that are over 40, 50 bucks a share. My bailiwick, my expertise, my decades of experience is things like 10, 20, 30, usually 15 to 30 is my if I were to pick a specific price region that I like to trade the most, is things priced between $15 and $30 a share. So I don't want to trade $60, $70, $80 expensive stuff, and I really don't like trading the $1 and $2 haphazard random gambler specials that blow up so many people's accounts. I like charts. I like to trade things, at least myself, my experience has shown me, with some consistency. And you don't get consistency out of the $1 and $2 and $3 charts. They're all pop and drop all over the map because you have so many random people trading them. I like to trade things that have institutional volume and some degree of consistency. So we cover things like some of the meme stocks like Carnival Cruise Lines. We can see some examples there. Virgin Galactic, DraftKings, Bed Bath & Beyond. Those kind of charts, right? With those kind of prices. So good stuff. Yeah, I start at 8:30. We end at 11 because markets go sideways, and I know from experience, I don't know about you folks, but I usually take the most stop losses and get frustrated and very disappointed when I overtrade in the middle of the day. I even have a sign I made up to remind myself. No trades after 10:30, unless there's something really exceptional. But for the most part, I personally do the majority of my trades between 9:30 and 10:30. I stay in the room till 11 or slightly after. And of course, if it's a rally market or sell-off market, I'll stick around all day. I've done that many times. But As a rule of thumb, I'm there for the entire open from 8:30 early, from 8:30 till 11. Then I'm also there at the close from 3:30 to 4. So really good coverage. How many of you have ever had this bad? I'll wrap up with this question. How many of you have had this disappointing experience where you make a lot of money in the morning and then you give it away or you lose it by overtrading because you're confident, yay, I'm doing good, and you give it away by overtrading in the morning or overtrading in the afternoon or the middle of the day? That's one of the things that's my biggest disappointment. Very honestly, if I'm up like 800 or 1,000 by 10:30 or 10:45, and then I piss it all away by overtrading because I'm confident because I'm beating Wall Street's butt, so I'm going to just keep trading, and then I'm like down $100 or only up 100 or something like that at the end of the day, that's deeply frustrating and deeply disappointing. So I try and I'm not the guy to learn trading discipline from. I'm very aggressive. It's what I do. I'm a trader, and I love trading. I absolutely have a passion for trading and for teaching and sharing lessons learned. So that's what I've done for the last 2 decades of my life. So, but anyway, that's why I don't. I'm often there at lunchtime, but I try to avoid that because it's a good thing. Hey, thanks, TM saying amen. All right. Well, thanks, folks, for being here. I appreciate it. I hope that this has been entertaining and helpful, and I will see you guys in our next session coming up on Saturday. Actually, reminder, next Saturday I'm doing the Success Summit